George, it's great to see you. And this report really surprised people. Is it overstated?
Kelly, I think that in many ways, what the report highlights is the housing market is definitely in the throes of a winter freeze. In fact, when you look whether it's pending home sales, existing home sales, you're seeing demand from home buyers really plummet. And it's not surprising. We started the year at about 3.10%, for the 30-year fixed mortgage rate. We hit over 7% October, November. We've pulled back a little bit. But bottom line, for the typical home buyer today, their monthly mortgage payment is about $700 to $800 higher than a year ago. And the key here is inflation has eroded even what otherwise would be outstanding pay increases to the point when adjusted for inflation, most people's wages are actually negative.
Right.
So that combination is not surprisingly impacting housing markets.
And George, here's the thing. It would be one thing if we said, well, this data was horrible, but hey, rates have come down since then. No, rates, the 10-year yield has been going the other way to close out the year. We're going to see the mortgage rate surging again. I don't know what kind of shadow that's going to cast. We're going to start to head into the spring selling season here pretty soon with a pretty grim picture.
Well, and to your point, Kelly, not only is the 10-year Treasury obviously rebounded, so mortgage rates are likely to see a rebound as well. When you look at the fundamentals in housing market, right, on the supply side, we started this year already undersupplied. Given population growth, given construction, we don't have enough homes really to satisfy how many households have been born over the last decade. More importantly, since about the late summer, homeowners who might otherwise have sold have, in a sense, gotten worried. They missed the market's peak and they've pulled back. Realtor.com, we've been tracking new listings weekly, and we've seen this pullback, double-digit pullback, week after week after week for several months. So it's obvious that homeowners who would contribute normally to the supply are also spooked by these rates. Naturally, some of them have, 2.5, 2.8 mortgage rates right now. They don't want to trade those for a 6% mortgage and a higher home price.
So where does it go, George? In 2 years, how does the American housing market look?
Well, we have several forces really working right now in the market. Number one, we're seeing prices come off the peaks, and I think that's key. Since the peak of summer, we're down roughly 10% for sales prices. What to me that says is we are moving away from the feverish pace of the over-competitive markets of the last year. Number two, on Realtor.com, we track listings with price reductions, and we've seen that share hit 20% in the last 3 months, which tells me we haven't seen that number since about 2017 when the market was decidedly very different. That tells me the market is already beginning to rebalance. The trouble is we definitely need more supply, and there's no getting around this. We simply have more people in the country, and most cities around the country over the last decade have sort of taken a, not in my backyard, speaking of the NIMBY, mention you made earlier, right?
Bananas.
But I like bananas even better. I think that's, perfectly seasonal. But the trouble is there's no getting around it. We're trying to solve a problem, and the solution is rather simple. Fix, in a sense, the zoning. Look at lumber prices. They've already retreated. They were $1,300 per thousand board feet in March. They are under $400 right now, more or less in line with pre-pandemic prices. So construction costs have come down. In a sense, supply is many ways artificially constrained by zoning, and it's kind of hard to get around it given how many municipalities control the codes directly.